Hi, this is Daniel, and you're watching Unrivaled Investing. This is a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. We're looking for potential multi-baggers, folks, types of stocks that could potentially go up hundreds or even thousands of percent over time. Today, we are talking about the bloodbath that has been going on with Chinese stocks. It has been brutal, and in this video, I'm going to explore why they've gone down and what are my thoughts now. So let's dive right in. First, one should understand I've done a couple of videos on Alibaba, and full disclosure, I own Alibaba stock. I have not been selling despite this brutal downturn. I like the upside potential. That's effectively the basis of these two videos. One sort of goes into what does Alibaba do. The other does an update on their most recent quarterly updates. And so while I like the upside potential, seeing potentially, several 100% upside, there are real systemic risks, and I could be 100% wrong. And that's sort of the purpose of this video, is sort of saying, why has the stocks and these Chinese stocks, these behemoths, just gone slaughtered over the last few months? That's exploring some of these headlines. For example, I will talk about these headlines in just a second, but it's first worthwhile to understand, as you're looking at potential multi-baggers, trying to find them, one should recognize it's going to be a bumpy ride. You're not going to find things that just go straight up. Sometimes, things can drop hugely, and that's what I really enjoyed about Chris Mayer's book, 100 Baggers, and I keep that over my shoulder just to constantly remind myself and viewers that this is not smooth. If you wanted something with a steady payment, it's called bonds, and I think stocks are way more attractive over a long time period. And many, in this book, 100 Baggers, he identifies many 100 baggers, but they routinely had huge volatility, dropping 25, 50% in a day. I personally once owned a stock that dropped 70% in a day, went on to be a 50x over the ensuing decade. Some have dropped over 90% in just a few months. So there's a lot of lessons to be learned in that. This is the volatility that you're dealing with when you're dealing with companies, when you're dealing with stocks, period. There's just a lot of volatility that you sort of need to embrace if you're going to be a successful long-term investor. Now, as I look at Alibaba, the stock is down about 40% in the last 6 months, down about 20% in just the last week, and it's been really unpleasant. And this is honestly, psychologically, a lot of folks just aren't cut out to handle this repetitive beatdown, and that's why it's important to focus on the fundamentals. But why is Alibaba down so much as we look at it? Well, there's a couple of different headlines. One of which is China's online shopping growth plunges to 4% in July as retail sales disappoint. That's a huge disappointment, effectively saying online sales 4% versus the historic average of around 20% over the last 5 years. Slower growth would suggest lower valuation. That's the concern. Is it structural, or is it more of a cyclical downturn? Certainly looking at a weaker economic outlook in China. Then you also see recent developments with Tencent, where they talk about how, look, the regulation on internet is a global trend, talk about how it's happening around the world. It's not just limited to China, but in the near future, new regulations should be coming. They're talking about how the regulation is focused on industry misbehaviors and also efficient regulations, emphasizing compliance, social responsibility, as well as fair and proper behavior. And their view, and I think this paragraph here is the crux of whether or not you can invest in these Chinese behemoths, these Chinese stocks. Full disclosure, I do own some Alibaba stock, as I've already mentioned, is to go from our understanding is that the government actually wants to foster a long-term sustainable development of the internet industry. The government does recognize the importance on the economic side and social side of the internet industry, and also the contribution of the industry to global competitiveness. So that's why it does want to foster a long-term healthy environment. So if you're an investor in Chinese stocks, this is the crux of a multi-trillion-dollar thesis. Do you think the CCP wants to foster a healthy long-term industry for Chinese internet companies? If you don't, and if you don't think they actually care about the long-term competitiveness from a global perspective, their long-term economics, then you shouldn't own it. That would be, if you don't think that that's what the CCP is going to do, then you probably shouldn't own it, just because it's like, well, wait a second, their economics can get screwed. This might just be a zero over time in terms of what are their actual profits. But if you think longer term they want a healthy industry, that means healthy profits with fair regulations, then then it might be a compelling holding. And that's sort of the camp that I'm in, sort of saying I think that this is ultimately, after a tough period of regulations, a period where a lot of investors, oh my goodness, look at these regulations. After a period of a big change, you will get to a new healthy period. That's how I'm looking at this. And so, as we look at this, you're effectively saying increased regulatory scrutiny for the time being. Some of that means higher taxes, and China calls for curbs on excessive income and for the wealthy to give back more to society. They've talked about how some movie stars have made millions of dollars and how it's improper to make so much relative to the budget of the film. And also effectively big firms that are successful to give back more to society. And sure enough, shortly after seeing these headlines, you see Tencent doubling the amount of social aid that they're giving to around $15 billion. This is around 50 billion RMB. So it was in two different tranches. One was recently back in April. They pledged another 50 billion. So this is the second of two 50 billion RMB tranches. The first was about sustainable social values program. The new funds will be focused on areas like increasing incomes for the poor, improving medical assistance, promoting rural economic efficiency, and subsidizing education programs. So for a lot of folks, this might be a deal buster, effectively them saying, you know what, this is too hard. These companies aren't actually ever going to generate a profit because the CCP is going to step in and just say, hey, you're required to donate your profits to whatever causes we see prudent. This is tricky. And this is the question of, do you believe in long-term sustainable, internet platforms, or do you think the CCP is going to, rule it with a heavy hand, and twist their arm to say, hey, whatever profits you generate, you're going to have to donate them. And I can understand why some investors are selling, even despite the fact that it's down so significantly over the last few months. They see this and they just go, there's no way these companies are going to be sustainable long-term. So what am I doing when I consider all these things? First, a quick plug, where if this is your first time tuning in, my name is Daniel, you're watching Unrivaled Investing. If you want to follow my personal journey, go to unrivaledinvesting.com. First week of the month, I call up my full portfolio. Each week, I have an email update, sort of saying, hey, here are my thoughts, here's what am I buying and selling, what's going on with the market. And then by the end of the month, I call it a potential multi-bagger. We also have an exclusive Discord community where I'm interacting with the Unrivaled Nation on a daily basis. So what am I doing from here, recognizing this long list of negative headlines, and so first, one should understand I still have this large basket of Chinese stocks. It was originally around 25% of my portfolio at cost. Now it's down a little bit. I haven't sold any shares, but it is down, a bit just because the share prices have been collapsing. I own the Hong Kong stock for the most part. Now, as I've mentioned before, could I be wrong? Could the CCP say, you know what, going forward, all future profits, need to go to us and whatever causes we see prudent? It's possible. Do I think that they actually recognize that it's important for their global competitiveness to have these strong companies? I think so. But we'll see. I could be wrong. So I'm focused on sitting tight and focused on the compounding. And that's a key aspect that I think a lot of investors need to consider as they think about their own personal journeys. Think about their psychology. Think about, oh my goodness, they watch a stock get hammered, drop, down 3%, 5%, 10%. Day after day after day. It is brutal. And psychologically, physiologically, we are not meant to have that repeated hammering to the head. When we are confronted with that sort of brutal behavior, usually it's like, I can't handle this pain. I need to get out of here. And that's part of the things that I liked about Chris Mayer's book, is that oftentimes a lot of our troubles, not only from investing, but I'd argue life, is that we tend to be a little hyperactive. We tend to be overreactive in terms of just, okay, let's just slow down, think about what's going on. So that's what I'm going to do here. I'm going to focus on the fundamentals. I'm going to focus on, of course, I will follow the new regulatory updates. But I want to focus on, what is the company doing actually? Are they still generating profits? Are they still buying back shares? Which, Tencent and Alibaba is doing. So I want to focus on, okay, what's actually going on with the free cash flow? Has this business been permanently impaired? And I think right now a lot of folks are saying, you know what, this is too hard. These businesses might have been permanently impaired. They might be right, but that's what's causing the supply dynamic where the share prices are just collapsing. It's very possible in 18 months, 24 months, investors, this whole regulatory period, this is the thesis that I'm sort of playing for, is that 18, 24 months, investors wake up and realize, oh, that regulatory period, that was brutal in 2021. But now you're looking at 2023 and you're not hearing the CCP talk about this heavy crackdown in terms of regulation. They did it. It went through this tough period. It was a period where stocks dropped significantly. Now you're living through the period of, hey, we set new standards and we're going to address them and we're going to live by them. And maybe that $15 billion that Tencent is donating to effectively the CCP's causes, maybe that's a one-time donation. If it's not, then it's like, okay, this needs to be reset lower. that's something to be mindful of. Or maybe the tax rate gets bumped up higher. So I'm personally watching this. I'm very cognizant of the fact that in order for these 100 baggers to work, you need to sit tight and let the compounding happen. And so I look at Alibaba, I look at their growth rate, I look at their most recent quarter results, I look at Tencent, I look at their most recent results. I'm saying these businesses are investing in a lot of things that create a lot of value. I think they will continue to grow over time. So we'll see. In full disclosure, I own Alibaba stock. If you want to follow my personal journey, go to unrivaledinvesting.com. A lot of folks are like, Daniel, please stop calling out Chinese stocks. So for my Unrivaled Investing Journey subscribers, this monthly potential multi-bagger will not be a Chinese stock, even though I do have about 20% plus of my portfolio in Chinese stocks, 25% on a cost basis. And I hope this video has been helpful for you. I'd love to hear your thoughts below in terms of, Daniel, are you just crazy with this, these headlines? This means you should absolutely get out. Or if you're like, you know what, I actually think you're right. I think, 24 or 36 months down the road, investors might be looking at this completely differently. So love to hear your thoughts. Thanks so much for watching this video. If it's been helpful to you, please make a point of subscribing. If you're already a subscriber, hit that thumbs up button. Thanks so much.